Okay, good afternoon, everyone. It's Wednesday, April 24th at 4 p.m. This is the budget workshop. City Clerk, will you call the roll, please?
Mayor Rosteck,
Present.
Vice Mayor Brooks, Commissioner Kerr,
Yes.
Commissioner Taglerini, Commissioner McGeehan.
Here.
Let the record show that Anne Marie Brooks and David Taglerini are not present at the moment.
All right, thank you. I guess we can skip public comment unless anybody from staff wants to talk. All right, we'll go ahead and move forward from there then.
And Mayor and Commissioner, good afternoon. Robin Gomez, the Madera Beach City Manager. This is our first of likely 5 to 7 budget workshops to discuss briefly our fiscal year 2024 budget, but mainly to begin to obtain your thoughts, ideas, suggestions after we provide some information on our fiscal year 2025 budget. Just a couple of things before I turn it over to Mr. Laughlin. We, as you're aware, or we have maintained the same millage rate now for 5 consecutive fiscal years. We're at 2.75 mills, a mill again being $1 of $1 of a tax for every $1,000 in valuation. So simplistically, if a house is valued at $100,000, if the millage rate is 1, that house would pay $1,000 in property taxes. As we go through this workshop and other workshops, please feel free to ask questions. We are soliciting your input. Feel free to, at any time, to stop myself or Mr. Laughlin or any of the staff. Most of the department heads are here. Please feel free to ask any questions or anything that you believe regarding any of the information that we provide. At this point, just to give you some of what has already occurred on the staff side, on the administrative side, we would not be recommending an increase in the millage rate. I will not say that we are recommending a decrease in the millage rate, but certainly definitely not an increase. Mr. Laughlin may have some preliminary information on property valuations. We believe they are an increase over the prior year, of what that percentage would be and what that revenue may be for next year. You will hear, obviously, our reserves are adequate or more than adequate. We had our outside financial auditors, James Moore, give a brief update at the last meeting. So we'll go over that as well as part of the information that we will provide. We are not looking for significant increases in the budget, other than there will be continuation of capital projects. So our budget will fluctuate based on where we are and if you recall from last year, for the budget for the current year, a number of projects from the beach groins to a public works building to a parking garage to renovating restrooms at Archibald Park, and other projects that, again, we did budget some of those in their entirety for the current year, but extending out anywhere from fiscal 25 all the way through fiscal year 2028. And of course, we will update our capital budget, which again, for the current year, for example, is essentially half of our total city budget. So to give you an idea, but on the operating side, we are looking to recommend at the most probably additional two full-time equivalents. One that likely would not begin toward the latter part of the year, but we are in the process of working to have the Reddington Beach Fire Station. And although that station likely will not be operational in fiscal year 25, we may begin to hire at least one additional personnel in our fire department, but potentially the staff that may fill that station, but likely that won't be until fiscal 26 depending on the construction. And we may have one additional position in our recreation. We're still kind of reviewing and determining how to proceed, but all other departments will remain with no additional personnel. Other items to consider, specifically in personnel costs, since they do tend to make up typically the majority of operating budgets. For the current year, last year, you did approve a 6% salary increase. We are going to propose that number, possibly a little bit higher, likely not lower. But again, these are just discussion items. We haven't put anything finalized in terms of what that would look like, but something comparable to what was approved last year for the current year that we will look for next year. And most of the other operating expenditures will remain the same other than inflationary costs. The good part about inflation is that fortunately our revenues have continued to increase in some categories. So we will go over some of that. We'll get into likely more detail as we go in the May and June workshops, specifically about our operating revenues and expenses. So just kind of giving you an overview before we jump into the actual presentations and the data that's in the packet. But any questions regarding? I know it's just kind of a overview of how to begin. And again, just to be clear for anyone who watches or listens to this meeting, in your property tax bill for property owners, the 2.75 mils that the city of Madeira Beach levies or collects represents about 16.5% to 17% of your total tax bill. Again, the largest portion of a property tax bill is from the school, the Pinellas County School District. There's a state portion, and then there's a local portion. After that, it's the millage rate that every property pays Pinellas County for the overall county, Pinellas County services that are received. And then there are, smaller taxing authorities, everything from Pinellas Suncoast Transit Authority to the Southwest Florida Water Management to the Ford Pinellas, or it might still be listed in tax bills as the Pinellas Planning Council. I don't know if they've changed that, but that's how it used to show up. And then we'll also, that's really the main part of our general fund. Again, there are other taxes and fees that we collect. Don't believe any of the other taxes or fees have increased. And of course, if anything that increases by state statute, we would advise. And then any fees that we increase, obviously they have to be approved via an ordinance in order to take effect. We will be looking at some fee increases in some of our business or enterprise funds, possibly within the marina and in the parking operations, but we'll again likely discuss those in the May and the June, what that will look like. And of course, all of this that I've been mentioning, our fiscal year 25 will begin October 1. Again, we'll have multiple of these workshops. We are required by statute by July to have a millage adopted. Am I getting the date?
I believe that's end of July.
And then, of course, we have to have 2 public hearings for the budget in September and have a budget adopted before the end of September. And the final thing, of course, I've had some residents mention, why do you have to have a balanced budget? That's just a requirement under state statute. Why can't your budget be like the federal government? I said, well, that's not necessarily a good thing. You want our revenues to equal our expenditures rather to equal you want your revenues to equal or exceed your expenditures. We're only allowed to submit a balanced budget. So, and that's what we will eventually present with your input, again, for the 2 public hearings and adoption in September. Once the full commission, I know Commissioner Brooks stated she would not be here this evening. We will look at the calendar for September, as we do have a couple of requests to move the September the 18th September 25th meeting. So we'll review and look at dates, potential dates, maybe Friday, September the 27th or Monday, September 30th. But I didn't get with Andrew. I think we can still have the adoption on September 30th,
Good,
Good.
yes.
which is a Monday, but we will get back. We still have a few months to make that determination. So I'll turn it over to Andrew.
Great. Thanks, Robin. Okay, so we'll start with the budget workshop #1 agenda and just kind of walk through what the plan is for this afternoon. Kind of high level synopsis is this is kind of your warm up, stretching yoga exercise before we really get into the nitty gritty of the numbers on FY 2025. So what we're going to cover today is more of a historical analysis of kind of where we are to date, FY 2023 audited results, and then how do we do revenues versus expenditures, budget versus actual in the various funds of the city. And then we'll also look at our capital projects that we had budgeted for in FY 2024 last year around this time, and where are we on those projects. So we've got a worksheet that kind of goes through that I provided for your information. We can discuss, address any questions you might have on those. Then we also have a mid-year budget amendment for FY 2024 that I wanted to put in this workshop. And then with your approval, we'll put that in the agenda packet for the next regular meeting to adopt that resolution. Typically, we'll do about 3 maybe budget amendments throughout the year. We usually do one at the advent of the fiscal year that takes into account those purchase order rollovers, we call them encumbrances, where we have projects that we anticipated completing by the end of last fiscal year. They didn't. We had a remaining encumbered balance. Those weren't included in the FY 2025 budget because we thought we'd be done in 24. So we roll those over and that gets adopted through an amendment to increase the budget for that. We already did that. I think that was passed in December. And this one is just some evaluating kind of mid-year, where are we? Budget versus actual. Were there any unplanned expenditures that we need to make a little budget amendment for? So we're going to go through those in that section 3 of the agenda. And then the last thing, we'll just walk through the timeline for budget workshops and then ultimate adoption of our fiscal year 2025 budget. How many workshops are we going to have? What is the proposed topics for each of those workshops, so we can kind of talk through that so you have an expectation of where we go from May through the end of September. Sound like a plan? All right.
With you.
Let's do it. So let's go to the next page. And this is, I love this page. This is my fund balance benchmarking analysis, because we just look a lot better than our neighbors financially. Some ratios to look at: fund balance divided by total operating expenditures. So City of Madeira Beach is 149%, and then just unassigned fund balance compared to personnel and operating expenditures, 97%. And if you look at most of the others, were higher, right? And so the auditor, if you recall the audit presentation, the GFOA, Government Finance Officers Association, typically recommends having about 20 to 30% of total operating expenditures available in unassigned fund balance. And we definitely blow that away. So we're higher than that. So we look healthy from a fund balance standpoint in the general fund. And that's important in case there's any bigger planned expenditures, maybe even in other funds that we might need the general fund to support through transfers. And so we saw that a little bit in the Archibald Park Fund, where we're going to do a big beach growing renourishment project. So there's been some transfer activity from the general fund to the Archibald Park Fund, plus more anticipated. So we definitely want a healthy fund balance in the general fund. And so this does look good. And then if you just look below that municipal comparison into the City of Madeira Beach general fund inflows, general fund outflows year over year, you might think, well, this looks like a concerning trend. FY21 had 1.2 million, and the difference between total inflows versus total outflows. Inflows meaning revenues plus what's called other financing sources, which is typically transfers in from other funds. That's the typical inflow, other financing source. And then outflows are your expenditures plus transfers out. So you did see a big dip there from 22 to 23, but we did drop some, 112,000 to the bottom line in FY 23. So why the dip, do you ask? Well, we did see general fund outflows were significantly higher in 23 than 22, but that's explainable. And the big items that contributed to that was transfer activity was a lot higher. So in 2023, we had a 1.75 million transfer to the Archibald Park Fund that we did budget for in anticipation of those beach growing renourishment expenditures. We also had a 1.49 million transfer to the Stormwater Fund, and that was higher in 23 than it was in 2022. We also have parking revenues. They're now in the parking fund, so revenues maybe a little impacted, although we did have, I think, about a $2 million transfer from the parking fund in 23 to the general fund versus in fiscal year 2022 and previous, we didn't have a parking fund. Pardon the pun, we parked that revenue in the general fund in FY 2022 and previous. But FY 23, we created a separate enterprise fund, the parking fund. And then in 23, we did have a transfer from parking fund to general fund. But that transfer wasn't quite as high as the gross inflows that we had in years previous. But you also see there was higher revenue or inflows in FY 23 compared to 22. So there was also the Gulf Boulevard undergrounding project that had a lot more steam in 23 compared to the previous years. We spent $3,378,000 in 2023. So that's an expenditure, but it's also offset by our revenue since we get reimbursed through Penny 4, I believe, through Pinellas County. So yeah, we had higher expenditures, but then we also had higher revenues. So ultimately, since that's a wash, a lot of that difference being so much lower in 23 than 22 is due to the transfer out activity, as transfers out were a lot higher in 23 than 22. On to the next page, unless you all have questions.
I was just doing a little, in my mind prior to the meeting, just a comparison personnel and operating expenses total with comparing Mad Beach with Treasure Island. Is that historically, do you know that is typical? We kind of, that's our closest comparison as far as a city, and they have generally the same services that they provide that we provide. You have any idea, or just?
I'd say more or less, I'd say they're a good comparison in terms of size and complexity. I mean, they do utility billing in-house. No, excuse me, they do not do utility billing in-house. They also rely on Pinellas County. The Gulfport does utility billing in-house. But yeah, I think size, their employment base and the level of services are pretty comparable to what we have.
Okay, I just didn't know if you had any historical trend, or not. Just to.
I don't think we can, research that, but it seems Treasure Island has historically had about 20 more full-time employees than we do. They do have their own police department. So that's, I think, just right there about an additional, well, probably more than 20, probably about 20 just in the police. And I know their public works, I think, is a little bit, and they have a wastewater. They own their own wastewater, but so not sure if this includes the wastewater being a utility. It might.
Well, the whole point of it is to
They're-
compare yourself among your peers,
Right.
and
I will tell you, the budgets do kind of ebb and flow based on capital projects. So I know that just says total but I'm recalling because I did look last year over the last few years. I don't remember the personnel and operating, but the total budgets are very comparable. But one year, one city may have a $25 million total. Next year, it's 40 million because 14 million of that were for capital. That's what we're experiencing this year, or have been now for 2 years and likely into next year. That's what I recall,
but
but
these numbers do include all the capital projects as well.
not the personnel and operating, but we can look at that
It's just
history.
That's a
and-
line item. I was just curious.
I mean, to put in perspective, City of Treasure Island in FY 2021 had expenses of 12,159,939 per its, well, let's say net of capital outlay. It was 11,427 in 21. We were 7,706. So yeah, we were a bit lower. So I think that's those.
But now we're 12.
And now we're 12, right?
Is that on, is that?
So you're curious what that is? Well, we can cheat and go to historical, 5-year historical expenses.
Is that like is that a short-term bump? Or, because we added new vehicles,
But we also
um,
increased salary. We went from some of our lower salaries at $10.50 an hour to then 12 to now our lowest salary is $15.75. So that's where some of that is attributable. We have made significant adjustments to stay competitive for quite a few salaries, including the 15% adjustment for fire. But adjustments citywide have been made in the last 2 years, combined with just the general wage increases of 5% in 23, 6% for the current year. I'm pretty sure Treasure Island and all of our comparable cities are similar, but that's something we can look a little bit,
No,
that
you-
would
you see what
explain
you-
the reason.
You understand my questions.
Yep.
So just trying to do a comparison. You were mentioning, does Treasure Island have their own fire? They have their own fire, don't they?
Yes, yeah. Yeah, so the services that they have that we do not provide directly, police and wastewater.
Yeah.
I don't think they have a marina, right? They don't know, but they don't have a city marina, but that's a,
Really a
Yeah.
net positive.
So, yeah, if you want to go to, well, they go on that 5-year expenses.
yeah, that's up
So,
on the screen.
so the biggest culprit, go to the Public Works Administration line,
Mhm.
and you'll see in FY 2023, that was 3,801,237. In FY 2021, that was 313,901.
Right, it's a big bump.
So it's a huge bump, and that's a bonus that we gave to Megan Webb for our Public Works Director.
Oh, it's done a great job.
Nice.
That's the Gulf Boulevard undergrounding project, right? So
Right.
that's not capital because that's not our asset. So that is treated as an operating expenditure,
Oh, that, right. That would
And-
explain.
but it's non-recurring, right? So that was, I think I mentioned that in my initial monologue of
Right.
3,378,737.
And I think the other big one was
Non-departmental.
the non-departmental, yeah. I was
Well,
thinking
non-departmental, that's a lot of some transfer activity that I mentioned. That's not included in the 12 million. That total you see is 15,828,000. So the 15 versus the 12, that's a lot of your transfer activity. But the operating expenditures for that 12 million versus the 8, that's the big culprit is the one-time Gulf Boulevard undergrounding, 3.3 million.
And that's the main question. Is that something we have to be concerned about year after year?
Well, that undergrounding,
Apparently.
and Megan can speak to
Apparently
where we are in that project, but that undergrounding is getting reimbursed through Pinellas County. So that's not a hit that we're taking.
Yeah. Cool.
A good portion of it, not all of it.
So we are on track to finish Gulf Boulevard this fiscal year. We should be starting that project. I think we just received our FDOT grant, or not, I'm sorry, permit. So we should start within the next month on Gulf Boulevard, and we'll finish phase 3, which will finish us all the way to Johns Pass.
Still waiting on equipment, correct?
Honestly, it's a hot mess. I actually just got off the phone with the Duke Energy site manager who's from North Carolina, and I think everybody's a little bit confused, but allegedly our equipment has been delivered to somewhere in the Reddingtons. Half of it is at our yard and some of it is down there. So I'll get to the bottom of it.
Okay, perfect. Thank you, Megan.
And usually those things aren't capital, right? Those non-recurring one-time, but because these aren't our assets that they're under ownership and control of the city. It's technically a maintenance operating expense. All right. So just to go to the 5 years historical revenues, feel free to ask any questions on any of these line items. I'll just maybe hit a few of them that especially in the far left on just FY 2024. We have one line that states other financial assistance federal. So that's budgeted 2,154,172, and then actual is zero. So that's from the American Rescue Plan Act, ARPA. And we did budget that to come into revenue this year. And I actually just did complete the required reporting to the US Treasury for the SLFRF, the state and local fiscal recovery funds. And so that 2,154,172 is what we received. We got that money check in hand or ACH, but it's been sitting in a liability in our financial statements until quote unquote expended. But the beauty of this is that we can, because we're an NEU, a non-entitlement unit, with less than 10 million in funding, we can use all of it on revenue replacement, which essentially means we can spend it on anything. It's really no strings attached. So we can just apply it this year on general government operations, but ultimately what's going to happen is that's going to drop to fund balance. And now we have that, we should have a fund balance pickup on in the general fund for that 2,154,000 that's been sitting in a liability. Now we're going to recognize it in revenue in 24, and then we'll have an increase in fund balance as a result of it. And that's available for really any use. There's no restrictions on that. Then we also have a couple others like shared revenues, other local units, $1,015,000 budgeted, only $789 spent. We've got state shared revenues, a little over 2 million budgeted, only 250 spent. That state shared revenues, that's the dredging and what we're doing in Johns Pass Village that we will get reimbursed for. So we've incurred some costs, but haven't gotten significant reimbursements as of yet. And then these shared revenues, since that comes from the state, that's your state shared revenues. And then shared revenues, other local units, that's from expected revenues from Pinellas County as we finish the Gulf Boulevard undergrounding project. So those revenues will come in. That's just why it's just timing issues on when you see a bigger budget number versus actual. Otherwise, we're looking pretty good on budget versus actual for revenues for other items. Ad valorem taxes, we're almost right at budget as we would expect that. You know, we'll still see some trickling in collections from the Pinellas County tax collector, but largely we've collected most of what we budgeted. And then if we move to expenses, again, the big item here, only 5.5 million expended versus 18 million budgeted. And we don't budget too much in capital outlay and capital projects in the general fund. Some, yes, but a lot of what we can budget that qualifies would be in for spending our discretionary surtax funds. We would budget in the lost fund. That's the local option sales tax fund. That's essentially all capital. Although we could have some capital in the general fund, but largely a lot of what the big expenditures you see in the non-departmental, 5 million versus 413,000 spent. A lot of those are just departmental transfers that typically we wouldn't make until the end of the year. And we may not make it all if it's deemed not necessary because budgeted expenditures turned out to be much higher than actual in the intended fund. So we have a budgeted transfer of 2.5 million to the Archibald Fund in 24. 300,000 of the debt service fund, just for the governmental fund debt, and then 1.495 million to the stormwater fund. So those are budgeted transfers outstanding that we'll evaluate at the end of the year to actually make. But that's why you see a bigger discrepancy between the the budget versus actual. Any questions on that? Otherwise, that would, we're about halfway through the year, so you see on a lot of those other numbers, looks like we're about halfway there. So then these next few pages are just a carve out right out of the ACFR, the Annual Comprehensive Financial Report for FY 2023 that was presented by the auditor at last regular meeting. He didn't go into the details of each of these budget versus actual statements. I just wanted to show them to you. We did a lot of focus on general fund, but just to kind of show on these other funds. Here you got the first is the building fund, building department fund. We'd had a little bit of increase in fund balance, 41,334 is that our net change in fund balance that's positive. So almost break even. We are going to see that fund balance though decreasing, which is essentially good to stay in compliance with state statute on how much fund balance you can retain relating to the enforcement of the Florida Building Code. So that's an average of 4-year budgeted operating. And so once we spend that, have some kind of one-time non-recurring capital expenditures, that'll bring that fund balance down further. That will stay pretty well under that threshold. So we've got, projects planned. We got a satellite office that we budgeted for in 24. We also have other projects currently working on in the future, a day room for code enforcement that's been budgeted previously, that we're starting to see some expenditures incurring on that. And then another future project, additional employee parking that we're gonna budget for in FY 25 as well. That'll be funded by the building department. The next one, the local option sales tax fund. So again, our revenues in this is just those discretionary surtax funds that surtax revenues that come in, aka the penny for Pinellas. And then those do have some strings attached on how to be spent. We can't just spend on operating, payroll, maintenance, and whatnot. So there's some requirements, and if we meet those requirements, then we can associate that project with the lost fund and be funded by those lost fund dollars. So we saw a really healthy buildup of that fund balance, 599,886, simply due to actual expenditures in the lost fund for those projects, much less than budget. So that's now carrying forward to FY 2024, where by the end of 2023, we've got about 2.5 million available in fund balance, plus the revenues that we're earning in FY 2024.
And what are the restrictions on this fund?
A lot on public safety vehicles and government structures, like a building or improvement to a building, or typically the type of capital improvement items that can be spent on on discretionary surtax revenues.
Okay, thank you.
So then we've got the Archibald Park Fund. So again, we had budgeted for a significant negative change in fund balance. You can see over $4 million that we would expect to our fund balance to drop. And so 5 million budget expenditures, and those are just projects that are delayed in getting going. And we'll talk more about that when we get in the capital project status update section. So ultimately, we had a high increase in fund balance because we had a transfer in for that 1,750,000. The transfer out, 52,000, was back to the general fund for the administrative overhead allocation that the general fund charges to other funds based on a number of factors, and it's kind of formula driven that we derived during the budgeting process. And so then that resulted in a big pickup in fund balance. So now we've got a higher balance in the Archibald Park Fund for almost 2.5 million. And then the gas tax fund, this one's pretty consistent, not really going to go much into that. We've got revenues to support our street lighting, maintenance efforts, and then related expenditures that we came in about break even, almost. And then debt service, that's just transfer in from the general fund mainly, and then paying debt service on the outstanding governmental activities debt, plus some investment income on that pooled cash investment balance that we have in the debt service fund. Any questions on any budget versus actual historical? If not, we can go right into the capital project current status. So hearing none, just moving right into that. So I met with each of the department heads and went through the project that they're overseeing and just got a quick update on kind of where we stand from what was budgeted last year. There's maybe some projects that just aren't going to happen at all in FY24 for various reasons. Others that are completely done, or we got the vehicle, or we completed the improvement, whatever it may be, and then some that are ongoing. So this is just more informational. And then this will also assist in the FY25 budget preparation and adoption process. If we know there's projects that we still want to do that we're just not going to get to in 24, we're going to re-budget for that and put that in our 5-year capital improvement plan for FY 2025 budget. Versus there could be some, again, that we're incurring expenditures now we expect to complete in FY 2024. And if we potentially don't quite complete and there's maybe a little left on the PO, the purchase order, we got that encumbered amount we can roll over, and that'd be a part of that amendment that we do just subsequent to the fiscal year 2025. But again, if it's something we still want to do, we just didn't get a chance to do it for whatever myriad reasons, we'll rebudget that in FY25. So this is just a listing of the projects by fund and project description of what we've budgeted and then current status. I won't go in each one, but if you read through it, have any questions, the limited information I have, I'm happy to address, but we've also got department head representatives here that can also address if you've got any specific questions on any particular project.
Megan, we're about to begin with the beach growings. Probably next week we have a meeting.
We actually have a pre-construction meeting tomorrow. The plan is to start right around May 1st.
Yep, and that was with Spieler Company that was
Correct.
selected for the construction work. That went to you all for approval just recently.
Yeah, and that's currently our highest dollar project, obviously. And then the Archibald restrooms will begin probably July.
I just received the permit. So we are planning to put that out to bid within the next month. So yes, hopefully July, September.
And then as Andrew said, any of the other projects that you may have a question on, but I can go through a few of them. You can see which ones have started, which ones have not, or they're intending on completing this year. Certainly some of the equipment we will, look to acquire this year, the equipment that has not been acquired yet. But realistically, most of these will either begin or be completed. I think there's only a couple of small ones that we've deferred onto fiscal 25, but including looking at the next kind of high dollar one, our public works structure, and I think we'll discuss a little bit at the workshop when we discuss the marina, but we are still looking to proceed with that, but we may have some other discussions regarding that project, but we have not started that one just yet, including as Andrew stated, the satellite office. We haven't started the military honor corps, though we do have engineering designs for that, but we're intending to begin that by this summer. Going to the next page or page 2 of this spreadsheet, really, again, some higher dollar ones are our road projects that we budget in the stormwater fund. So you can see where we are on some of those, and we are looking for area 3 and area 5 to begin this year, likely to be completed in early fiscal 25, but some sizable projects for under stormwater for road resurfacing. Parking garage will have at a workshop in May to provide an update as to where we are. That's been a little bit of a change, as I've shared with each one of you, but still looking as to how to proceed and what that may look like going forward. Any questions? Or
Just because these are listed, they're not all approved and released or anything. I mean, you have the park improvements. I know there was a lot of questions out there on that one. Just because it's in the budget doesn't mean it's released to go out to bid or anything.
You talk the BOC Ciego? Which one?
Yeah, the park improvements, the third line item on page
Robin, that
17.
is the pocket parks.
Yeah, the
Pocket
parks on BOC Ciego.
And those, after the 2 neighborhood meetings that we had, they went back to the engineer with comments, a couple of changes, and then they're gonna go out to bid. Once we then receive those bids, it would come to you all for approval to proceed.
Which may happen as early as May or June.
Could,
Could,
yeah.
likely June.
Okay.
So these funds are appropriated through the budget process, but through the procurement process, as we embark in a new project, potentially secure a vendor, those kind of approvals go through you, approving the construction and the selected vendor, that kind of thing. So this is essentially you giving us authorization through the budget adoption. Okay, here are the projects we approve. And then we go through the solicitation process and then come to you with results to ultimately move forward.
Okay. I'm good.
Okay. If no other questions on that, we'll move forward with that budget amendment number 2, that mid-year budget amendment. We just have the memorandum that'll be in your packet with the resolution, and the resolution 2024-03. And then the supporting exhibit for the amendment. So the first page on this is just a budget versus actual revenue comparison by department, by fund and department. And so just showing you original budget, amendment budget, and actual. And so I just kind of highlighted those that had a more significant variance, where we typically expect to see about 50% or so, since we're about halfway through the year. And so we've got the Archibald Park, no revenues yet for the beach growing renourishment. That was a 1.75 million appropriation. And then that 2.5 million transfer from the general fund, not recorded. Then debt service, we haven't recorded that budgeted transfer from the general fund either. John's Pass Village, that is the North Shoreline Dredging Project, 13,000 spent in 2024, 68,000 spent project to date, of which we'll be submitting and anticipating receiving reimbursement. And then the stormwater, that's again a $1.49 million budget transfer from the general fund as well. So that explains those larger variances. And then on the expense side, nothing much that really jumps out, except for the human resources is already at 92%. And so everything else is around 50-ish% or less. So that we did have my apologies, I need to put a star next to that 92% next to the human resources. So that's really the only takeaway from there is anything that looks of concern at the department level, since budgetary authority is at the fund and department level. We don't want to overexpend on any one particular department. And so then if you look at the actual amendment, so the first one, we've got for the city manager department, this is just continued litigation costs relating to the construction defects involving the fire station and recreation building. And these were incurred in 2023, still ongoing in 2024, kind of difficult to predict when we went through the budgeting process, how extensive it would be. So we needed to increase the budget for these litigation-related costs. And then I mentioned the human resources department. So we're charging all of our payroll processing fees with our payroll service provider in this account, this professional service account in human resources. So that account was significantly under budgeted. We only had budgeted 5,000, so we need to increase that by 30,000 to cover those payroll processing fees that are hitting that account in that department. And then on the next page, these were just property casualty insurance costs. Due to oversight, they just didn't get allocated to certain departments, but should have during the 24 budget preparation. So this cleans that up. It's just part of our general insurance, property and casualty insurance costs that we allocate among different funds and departments. And then the last one on the last page is just as we are converting employees from their ICMA, the International City County Management Association, ICMA defined contribution plan over to the Florida Retirement System or FRS plan. In that conversion process, we're taking each participant's available balance in that ICMA plan and funding the FRS plan to essentially fund their and give them credit for historical past service. Well, there was a funding deficit at the end of that. We didn't have any information on that during summer 2023 when we were compiling the FY 2024 budget. And so at this time, we think that's going to be around 760,000 that we'll need to remit to the Florida Retirement System. It's not quite finalized as of yet, but this is the best information that we have. And so we'd be increasing those FRS contributions for that funding amount for the conversion from ICMA to FRS for those selected employees that chose to migrate over to the Florida Retirement System.
It's a big number. Now that we didn't, I mean, we knew it was going to be significant cost, but this is above and beyond what we budgeted for.
It is, and yeah, we just did not have all of that information at the time, and I think it's still not quite final yet, but again, this is based on the latest discussions that my finance team members have had with the ICMA representatives and FRS representatives, that that's what this could be. And we didn't know levels of participation, potential levels of participation among city staff either when we embarked on this.
I don't know that we would have made any different decision, but it would have been nice to try to, I mean, that's a big oversight. Why is it back, if we can back up for a second on the human resources? 6 times the budgeted amount?
I think in that account, we didn't anticipate, that wasn't anticipated during the budgeting process. recording those payroll processing fees to that department. And I'm not sure where they were intended to be absorbed, but we think that the human resource HR department, since involves payroll HR and this provider provides HR services.
But this was
That-
offset by someone we had in that department that was doing payroll.
No, we're incurring those costs regardless of, so this isn't a person, this is software. So this is the software that we use.
So it's a one-time charge. It's not an annual increase that we're
No.
gonna have in that
No, it's
budget.
just
Just a one time.
Okay,
it's one time, yeah. We just missed it in the budget process that,
Okay.
okay, this is where we're gonna incur and record these payroll processing software fees.
okay, that was a bit confusing.
So we missed it? Is that what you're saying? It was an oversight?
I think it was, I would attribute to an oversight in not realizing that those costs would be allocated to this department, to this account.
How are we going to stop it from happening again?
Well, I think we'll have a better understanding that, okay, in the Human Resources Department, in account 531011, professional services, this is the account that is going to house our Paycom payroll processing fees. That
Did we have it in the budget somewhere else?
probably,
Yeah, but because of the amount, we'd have to go back and see exactly where it was budgeted, but it likely was split across multiple departments. Because every department gets paid and the payroll goes through the payroll software that we utilize called Paycom. So now we're grouping it into the HR.
So it's more of an accounting correction than an actual expense correction?
correct,
Okay.
right? The expense is always incurred. So it's not like this is a new expense that we've never seen before. This has always been expense. It's just accounting for it in the right general ledger account string.
Which is different than the transfer on that 760,000. That was an expense,
That's a new
a new
one-time
one,
expense.
but it's a one-time expense.
One time.
That's
to-
one time.
Right.
Right.
To switch from the ICMA retirement for those employees that chose to switch over to FRS. So we had mentioned and discussed that there would be an expense, and I think we had at the time discussed that it was going to be several $100,000, but it ended up being more than several $100,000. It's $750,000 to cover the entire cost to fund what FRS is requiring us to fund.
Okay. Okay, thank you.
And last,
And the last thing on the agenda is just to walk through our next budget workshops. So we're looking at just a monthly schedule, so we'll just meet on the fourth Wednesday of each month, so May 22nd, and then June 26th, then July 24, and then August 28. And the idea is by that August 28 meeting, we're all set. We've got a final draft of the actual complete budget book. And that then the September meetings are more perfunctory, no craziness of changing anything. It's kind of essentially locked down by that end of August meeting, and we're all set, and we just kind of go through the motions of the public hearing 1 and 2. And so to get you to that point to where, okay, we feel good about the budget cover to cover in August, going back starting in May, that's where we want to provide you with that 5-year capital improvement plan. So we'll go through all our intended capital projects in FY25 and then in future years. And so we'll review that in detail, and that'll be the primary focus. If I do get any information from the Pinellas County property appraiser on initial property values, I can provide some ad valorem analysis as well. but I want budget workshop number 2 to be heavily focused on the capital side. And then in budget, and then you'll come back, provide feedback, say, well, what about this project? Let's do this, let's defer this, et cetera. Then we can clean that up and then send back to you for budget workshop 3, kind of our final 5-year capital improvement plan based on the results of the May 22 meeting and the feedback that you provide. And then we'll also get into the operating expenditure budget requests for those operating expenditures. And that'll be in the June meeting. And then in the July meeting, we'll go through, get feedback on that as well. And then we'll go through in the July meeting, give you some more personnel budget details. We'll provide kind of our best estimates of revenues and other inflows. And that'll allow us to put an initial draft together of the complete budget by fund, department, to be incorporated into the budget book. And so that'll happen in July, and we'll kind of, so then August is really, okay, this is what you showed me in July, and here it all is together with a nice intro and give you really the full draft of the operating and capital budget for fiscal year 2025. So then you have that, provide any comments, feedback, if there is any in that August 28 meeting, any edits, et cetera, we'll make those. So then that budget document that we include in public hearing number 1, we'll have addressed any remaining comments that we had in the August workshop. And of course, if anything's, if we need to divert and pivot and we need to have another meeting to get through any 1 or 2 particular issues, we can always do that as well. Either it's between the June and the July meeting, the July and August, or if we need to have one in August and something's unresolved, we can meet again before that first public hearing. But if all goes well to plan, then I would say it's those 4 remaining workshops, then leading into our 2 public hearings. That should hopefully, as I mentioned, be kind of just business as usual. No surprises in those.
Good. City Clerk, for the record, I will not be able to make the September 25th, but Robin suggested maybe the 27th or the 30th if the other commissioners and mayor if that was acceptable.
And yeah, and we'll confirm with the other 2, likely at the next workshop, we'll confirm with the other 2.
Either that or I'll
Vice
just,
Mayor and the Commissioner.
I'll just have to be absent, one or the other.
Oh, no, we have to work together.
I
We
think we
can
can
move things around.
schedule.
I'm flexible. also.
Absolutely.
Thank you.
If we were to have it on the 27th, I think a suggestion was we start at either 4 or 5. Well, I think we have to have it after 5 p.m.,
Yeah, 5:01 PM or later.
5:01 p.m.
So I like the 5, if we do have a 6 o'clock meeting, then yeah, I like the
As long as we're
5:45,
out by
but
5:10 because it's final Friday.
it's a good point. Let's go 5:01 to 5:04. It should only take 3 minutes. Just hurry up and approve.
Right, but we'll get back, we'll work that out.
Yeah.
Yeah,
It is
it's a public hearing.
Yeah.
That would be the second and final public hearing.
Well, it
Public
still
hearing,
takes 3
excuse me.
minutes if nobody talks.
So again, either likely Friday, September the 27th or Monday, September the 30th. And it apparently does not conflict with any other budget meetings, either the school district or Pinellas County government, or I think even any of our neighboring cities, not that that's a big issue, but
Yeah, I
any
put-
of the other
I
tax.
put that in the final page just so
Oh,
you
I'm
can
sorry.
see
Yeah, the full schedule. Here it is.
the schedule. So June 1st, we'll get that estimate of taxable value. I think they typically maybe earlier in May, they'll give, here's our initial estimate, and then June 1st, then they give, okay, here's a revised estimate. Then July 1st is their certification of those taxable values. And then July 30th, we would notify, that's that end of July, we would notify the property appraiser of the proposed millage rate. And I provide that information to the property appraiser and complete that through the online trim process. Then the property appraiser mails those trim notices in August. And then that will that's the advertisement for that first public hearing date. If we're all good with September 11. As you can see here, it just cannot be September 5, or it cannot be September 10, or it cannot be September 19. So those are our no-no dates, but otherwise we can work around that.
A couple things I have with the trim notices. I would like to know, I know the commission would like to know, how many additional properties came on the tax rolls for this taxing period? Do we have to wait for the trim notices to find that out, or can we find that out now? That's question 1 of 3. And then how many properties went from homestead to non-homesteaded? And what are the consequences there in the positive for us? And then with property value increases, what is the percentage this year? And what are the potential consequences and positive for the city there? Would be the 3 things I think we would all like to know.
Yeah, I believe when we get that estimate of taxable value, that's all
It'll be on there.
we can query that data. As I believe I have just last year working with you, Commissioner Kerr, on some of the questions you had, so I can query that data and get it.
But it's not going to be till what you say, June?
June
Yeah,
1st.
just
is when they
next
give it.
month.
Okay.
Next month we'll get preliminary. And we
Okay.
can start querying that. I know for properties on the tax roll this year, I think we can pull out from our building software those parcels that received a certificate of occupancy before January, so through December 30th
or
of
30th.
2023,
Okay.
because we were closed on the 31st and the 1st. But any of properties prior to that should be on this year's tax roll. So we may condo B, or one of the condos falls into that because I believe they did receive their CO last year. The second condo just received its CO a month or whenever that was, just like the restaurant, the Don, the Beachcomber, they have a temporary, but so those will show up next year. But certainly one of those condos for this year, that's probably the biggest impact, because there's 27 units, I believe, in that condo, and those are sizable valuations, certainly compared to what was there before, which was a plaza, but it had been closed for a couple of years. So we would see that. In terms of the valuation increase, I think very, 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 very preliminarily, it's been suggested anywhere between 8 to 10%. Last year it was about 14%. I think the year before, and I don't remember, 22 was pretty close or similar, but it was in double digits. And so again, allowed for just revenues increasing, allows for the adjustments that were made and to keep the capital projects funded. So it's still a positive economy. I mean, we're subject to all the economic conditions, and it's still, but not necessarily, that will not always be the case. There's the economic cycles, and next year with the presidential election, economists are forecasting very early that should not be as big of an impact as in prior election years, but that's just a forecast, and based on all the data that we have, and really taking into account inflation, but also just costs of, how the economy continues to grow, expand, and part of it really based on how the federal government and what they fund, what's allocated. But at the same time, as long as we continue producing the goods and the services, the economy kind of keeps growing. And that's really the key. And but economic conditions can change as social, governmental, political, any blips in other parts of the world can upset it. But again, tough to tell what's going to happen in the future, but we're cognizant of that and obviously make our budget suggestions incorporating that information and that data.
Commissioners, you have any other comments?
I have a quick question. First of all, great job, Andrew. Very good job. Going back to the American Rescue Plan, the federal money, the federal assistance.
ARPA funds.
Okay. In the future of our budget workshops, are we going to discuss how we can spend that money for the people of Madeira Beach? Can we do that? Where's that money going?
So we're not, there's no requirement that you have to identify specific projects that can be funded by the American Rescue Plan Act. So monies that we received. So we've got a list of capital projects. You can say ARPA funded. So we don't have to specifically identify any one particular project or projects. From a compliance perspective, we're reporting to the U.S. Treasury and submitting to the auditors general government services that is essentially going to be a payroll audit when the auditor will do a single audit for the FY 2024 financial statement audit. And then what's going to happen is that ARPA money that's sitting in what's called unearned revenue, a liability, will now drop into revenue. We'll call it expended through personnel expenditures. They'll do a payroll audit, and now there's no restrictions on those funds. They drop into fund balance. We can spend what we want. What I would love to do is we also have BP oil money that I think to the tune of 300-something thousand that's been sitting on our in-fund balance, that we have a remaining amount that we do need to identify. So I would like in the FY 25 budget, because we do need to report BP oil expenditures, and there's an actual under state statute and rules of the Florida Auditor General, we need to prepare a schedule of what those expenditures are, and the auditor includes opinion language in the management letter on those BP oil expenditures. So I would like to kind of clear those out, and we could identify at least one or two projects that we can say, yeah, that's spent with those remaining BP oil monies, which was from over 10 years ago.
Yeah. Thank you. Great job.
Yep.
Any other questions or comments, staff,
Yeah.
commissioner, city manager, attorney, finance?
No, just
Stewart?
thank you for your attention and input. I think we've discussed this, particularly when I meet with each one of you about anything looking into what you would like to see in next year's budget. And from my perspective, I think the key things that I brought up earlier, millage rates, obviously, personnel cost and keeping up with inflation, certainly for our staff, more importantly than so that we have a good retention of our staff, which we appear to be have stabilized in that aspect, and certainly about one of the few areas in sanitation that's still one of those areas where we've had some turnover, but citywide it seems to be much better. But something that I certainly appreciate your support, and also the investing in the budget and the investing in our human resources, meaning our personnel, our employees, and certainly the equipment to be able to carry out the work that's being done, whether it's a new truck or a new sand rake or simply a new laptop or software to be able to process our agendas easier, et cetera. So very much appreciated, but we will continue to this discussion, obviously, when I meet with each one of you, but certainly at the workshops, and whatever ideas, suggestions, that's what these are for. So please continue to keep that in mind and let us know, and we'll continue to update.
All right, thank you. If there are no further questions, the time is 5:09 PM. We'll stand adjourned.